Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Gabriel Jarrosson of Leonis Investment. Gabriel, thank you for joining us.
Sure. Thank you for having me.
So what was your background before investing in early stage companies?
I started as an entrepreneur, actually. So I kind of went through the other side of the mirror. I think it actually gave me an edge to understand really what startups are going through because I was one of them very recently. So after engineering school, I started my first online company. I grew it, I sold it, I made a bunch of money, and then I said, okay, I'm going to invest it now.
Well, great. So what led you to start investing in syndicates?
So actually, syndicates was really, I don't know, maybe an origin story for me or something like that. So it's actually the follow-up of the previous answer. I started investing a little bit of money in startups, but I realized quite early that some deals were not accessible to me because of the amount that I wanted to invest. Basically, the amount was too small. And I said to myself, I didn't know about syndicates at the time. I said to myself, well, what if we could be a group of people, maybe friends, maybe people who have the same vision about investment? We could group our money and invest together. So basically, I thought of a syndicate without knowing it existed already out there. And one thing to mention, I'm from Paris, France. So it's also a much different sector and everything's different here anyway. And so we don't have a lot of syndicates here in France. And basically, I ended up starting one of the first French syndicates and realized afterwards that there were many, many of them in the US mostly that I ended up joining. So what led me to start investing in syndicates is basically I kind of imported the idea here in France. Also, what I think is really interesting is basically it gives you access to the greatest minds. So in exchange for a carried interest, usually, people are allowing you to kind of piggyback on their work and all those years that they created their network and people that they met, stuff like that. They actually allow you to piggyback on all of that and just for the carried interest in the end, which is, no big deal at all because it's only if you make money, right? So I think syndicates are actually a very, very great way of investing.
Well, great. Well, about half our audience are investors and they're always looking for advice on how to invest in startups. So what would your advice be to someone that's just beginning to invest in early stage companies?
So one of the advice would be, probably join a syndicate if you want to start to get into the startup sector. If you're an investor from if you do some other types of investment, you want to get into startups. Syndicates are pretty good for the reasons that I mentioned before. And mostly it will allow you to instantly benefit from a huge, huge deal flow from startups. And that's one of the biggest challenges that you're going to have when you start investing is how basically do you create your deal flow? And it might take years. It took me years, I can tell. So that's actually a very, very quick shortcut to start immediately to get access to among the best deals of the area through a syndicate. The other thing I would advise people starting in the startup sector is, and I'm actually quoting Peter Thiel on that from his book 0 to 1, people really over-diversify. Of course, it's important to diversify when you're investing. It's always a good thing to do, but I see so many people in startups mostly because their thinking is 9 startups out of 10 are going to fail, which is what you hear in the media and the press. Everyone tells you 9 startups out of 10 are going to fail. So people over diversify. They invest in startups that they don't even believe in, and they actually say to themselves, "Well, this might fail, but it's okay. It's normal. 9 out of 10 are going to fail." What I would suggest you do is to be 100% or even 200% sure when you invest that this startup is going to succeed. And the fact that you're sure will not prevail the startup from potentially failing, but it's such a difficult sector and the failure rate is so high that if from the beginning when you invest, you're thinking, it might fail, but that's okay because it's just a numbers game, you're not going to make it. You're only going to make it if you invest in 100% winners. And out of those 100% winners, actually, probably a lot of them will still die, but you'll end up probably making money on some of them.
That's great. So let's talk about the state of investing. How is the industry of syndicates evolving? What changes are you seeing out there with the implementation of a syndicate?
So two things. First of all, I'm seeing the market from afar because I'm still based in Paris today, even though I'm in the US quite often. So I follow the US market and the US syndicate market, of course, but mostly from online. What I can tell you very quickly is that the syndicate market in France is pretty much non-existent at the moment, and I'm growing it and creating it, but I'm almost the only one here in France. What I can see in the US is that I think it's growing. I think it's growing in popularity. I see syndicates already existing that have been existing for a few years, growing very quickly in the number of backers that they have. More and more people are getting interested into this. You also have all of those people. It's actually thousands, tens of thousands of Silicon Valley employees that are instant millionaires. We've seen all those IPOs in 2019, and it's set to continue. All those people want to invest, and they might be engineers and a startup. They don't necessarily have the network, the knowledge to actually invest. So I think there is a big ramp up for the syndicates. I think it has a huge room to grow and to evolve. Also, on a more of a macro level, there's so many people now worried about the stock market. They're really getting their money out. You have so many people having their money on negative interest rates because they want to secure their money. And I think this brings a huge opportunity for people actually willing to still take risks. We've seen that the IPOs of 2019, many of them, the value of the stock decreased after it went live. So this means that most of the money is to be made on the private side, on the private sector, on the private investment, on the private equity side before the IPO, basically. And a lot of people, I think, are realizing that, and a lot of people are getting into the private equity, and syndicates are, I think, among the best ways to start, because you can trust someone, you can trust a track record, and you can start with very small amounts. And all of those are great opportunities for almost anyone.
So what is your investment thesis in these syndicates, and how did you come to it?
So I have a very specific investment thesis. I invest only in software. I do not invest in anything hardware, anything physical. That's actually pretty much Silicon Valley-like, I would say. But it's very different here in France. You have so many physical products that get investments. I saw a lot of those in the US too. So I only want something that's not physical. The reason is pretty simple. Basically, when you have to create a product that you're selling, every time you're going to sell your product, you're going to have physical costs of creating your product. So of course, with volume, the more you sell, the more you're going to be able to drive your price down because you have better margins on your purchase and on your production and stuff like that. But still, even at your 1 millionth item, you still have to produce that 1 millionth item. On the other hand, when you take a software startup like Uber, when they do the 1 millionth ride, they do not have to produce anything. It doesn't cost them anything. The app is there, it's already running, but they're making the extra money. So that's one of the ways that I look at investments. After that, I'm looking for exceptional teams with great traction in an interesting growing market with good margins. Basically, yeah, that's more common. I guess that there's a lot of people investing with that thesis. But yeah, if I have those criteria, I'm good to go.
So can you name one or two example startups that fit that thesis, perhaps a couple of portfolios that fit well the thesis you have there?
Yeah, for sure. So I'm going to mention one French startup that maybe not a lot of people know, but that's okay. And then I'm going to mention a US startup. So the French one, the recent investment that we made is called BC Diploma. Basically, it allows to store and save diplomas into the blockchain. So as you might know, for any school that has more than 100,000 alumni, it's actually one full-time job of one employee at that school to be able to answer to all the questions, the solicitations from the recruiters of people who say, yeah, we've had that person applied for a job. They said they have the diploma from that school, that university. Can you actually confirm that it's actually true? Just to check the resumes, right? So it's a full-time job. When you put it on the blockchain, it's accessible with the public URL. Anyone can check, and it's actually verified on the blockchain. It's the school that actually puts the diploma online and certifies it. It's a great solution. They're actually selling it everywhere around the world, including in the US. And we, of course, love blockchain. It's not the only thing that we invested to, but that's one of the latest investment that we made, and I'm very proud of it. Another investment we made in the US, you might have heard of it. It's a much bigger company. We invested recently in Simplecast. They're basically the market leader into podcast hosting, basically. So as you obviously know, because you have a podcast, when you create a podcast, you actually have to host it somewhere. And it's very easy, very simple. Simplecast actually offer this service for anyone who wants for a very small monthly price. And they're actually the world leaders. They're recommended by Apple. And it's one of the investments that we made recently.
Well, that's great. So for the investors out there, how does the syndicate work exactly? Do they need to be accredited investors? And what is the minimum investment they need to put in?
So rules change depending on where you are. I'm not sure about the US. I think some syndicates are accessible to non-accredited, but most of them aren't. You can probably check that information. What I can tell you is that actually in France, it's much more easier. You do not have to be an accredited investor to be part of a syndicate. So that's a really good thing that brought me to starting at a very, very low entry ticket for any retail investor that want to join. So in the syndicate that I created, the entry point is 2,000 euros. So that's basically $2,500. And anyone can invest to follow the best deals that we do.
Well, that's great. So what are the challenges in running a syndicate and investing in startups? What are the issues you come across that you have to overcome?
So, that's there's many of those. So a few things. First of all, you have to deal with the volume of people. So actually, my syndicate is rather small because it's new. So I have 100 backers today. Still, that's already a lot. I can see how not easy it is to manage. So when you send an investment opportunity to 100 people, you have 100 people coming back at you with questions and with commitments and with stuff like that. So you have to manage all that. And of course, you have tools to do that, but it's still all the emails, all the questions, you have to manage the volume. So that's one thing. And I know some big syndicates in the US have thousands of backers already with 100. So it's growing very quickly on my part. I'm going to reach 100 probably in the next few months. But still, it's already not that easy. So for people who have thousands of backers, it's probably a nightmare. You need to have, 5 people full-time and answering emails or stuff like that. That's one of the challenge. The other challenge I would say is that most syndicates are, and mine is that way, and most of the syndicates that I see in the US, they're basically run by one guy. So I would say one of the challenges is basically when you're committing to invest in a startup. I started investing on my own, and now that I'm doing it with the syndicate, basically you commit to invest, you're actually going to commit everyone else's money. So not that I'm afraid of it, of course, it's part of the job, but you have to have strong shoulders because on your shoulders rests the weight of every other investor, every backer of your syndicate that's actually going to invest because they trust you, because they know you, because they believe in your ability to bring them good deals. So it really makes you think in a different way. Sometimes actually it happens that you think, oh, I could actually invest my own money just on a crazy, crazy bet. Like it's a huge, huge hypothetical. It has 99% of chance of failing, but the upside, if it succeeds, is huge. But then you start thinking, well, do I want to have all of those backers take that risk with me? So it really makes you think different, and it gives you, I guess, a lot of responsibility. Once again, not that I'm afraid of it, but it's really interesting and challenging.
Well, great. Well, if you had to pick a few sectors or applications out there today as immediate opportunities to pursue, which ones would you choose?
Wow, there's so many. So of course, one of the sector that I like the most, it's not at all the only thing we invest into, but it's something that I have a very, very particular look at is fintech and blockchain. So we hear about blockchain all the time. So I'm sorry, it's a little bit cliche, but I'm part of those people who thinks there's a huge, huge potential for blockchain in the real world. I do not believe in those crazy ICOs that have no purpose, but I do believe that there's some real applications of blockchain out there, and some startups are finding a real usage, like BC Diploma that I talked about earlier. So I think real world blockchain has a huge potential. Of course, also not very surprising, I do think AI has a lot of potential. Once again, there's a lot of hype around AI. I think it's something around 50+% of startups who say that they use AI actually do not use AI. So it's really kind of a buzzword that everyone throws out there. But AI that is really, really well used, that is really well applied for big data to find new theses, to find new connections. Machine learning, I think, is huge. And we can see already things that are done with machine learning that are completely crazy. So I think this has a lot of potential. What else? Yeah, that's it. There's so many things. I'm looking, of course, at self-driving cars. I think we have a huge one sector that I'm interested in is the tourism sector. It's booming. We have tens of millions of Chinese every year that become richer and richer and travel abroad for the first time. And they come, I know because they come to Paris where I live, so I see them all the time. They're everywhere. It's an industry that hasn't changed very much since the 60s. Basically, the planes, the aviation companies, the hotels hasn't changed much. Of course, we have Airbnb, obviously. But apart from that, and I think there's a lot of things to invent in that sector. And that's something I'm looking at. No recent investment in that sector, but I'm looking very closely.
Well, in the last few minutes that we have today, what else should we cover that we haven't?
Oh, wow. So many things. Let's see. Well, so you told me half of your audience is investors, half of them is startups. Can we maybe help the startup people? If you're looking for investors, I would suggest that you look for in syndicates and people managing them. It's actually a great way for you to get usually a decent amount of money, and usually you only have to convince one or a few people. So that's actually very good access to those, all of those investors. The other things, what startups really like about getting an investment from my syndicate is actually for retail B2C startups, because instantly you get hundreds, maybe thousands of private investors, and they're going to be extremely invested in the success of your company. They're going to want you to succeed very much, and they're going to be able to introduce you to a lot of people. So actually I said B2C and I meant B2B, my bad. In the B2B, if you're a B2B startup, then you get instantly 100 plus people who might know someone who works somewhere, who might be in your target. So one of the startups I've invested recently, I think 4 or 5 members of my syndicates gave the CEO contacts with the potential B2B clients, and 4 out of 5 ended up in contracts that they signed and new customers. So that's actually a very good, it's the cherry on the top, I would say, that makes sense to go through a syndicate.
Well, great. Well, how best for listeners to get back in touch with you?
So I'm very easy to reach on LinkedIn. You can type my name into Google. You'll find my website with a contact form. I'm on Twitter at Jarrosson, sorry. And anywhere. Don't be shy. Sure.
Well, great. Well, thanks for joining us today. Hope to have you back for a follow-up soon.
Great. Thank you for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.